Hello and welcome to Global Business Insight, where we look deeper at the headlines from a business perspective. Chinese EV maker Xpeng shares rose after it launched its new mass market Mona brand, costing just over $16,000, far below the cost of Tesla's Model 3. US prosecutors have filed fresh charges against Donald Trump over his alleged attempts to overturn the results of the 2020 election. It's just over 2 months to go in the White House race, and it's still looking quite close. Also in the US, the Conference Board's Consumer Confidence Index went up to 103.3 this month, the highest level since February, from an upwardly revised 101.9 in July. Meanwhile, home prices nationally in the US rose 5.1% in June after 5.9% in May. On Friday, we do get the Fed's preferred inflation gauge. That's the personal consumption expenditure index indicator, which is expected to come in as expected. That's month-on-month 0.2% growth. And in the UK, Prime Minister Sir Keir Starmer has warned that the autumn budget is going to be painful, interpreted to mean taxes will be raised in the October statement. Starmer spoke of making big asks of the public, particularly the wealthy, as he milks a honeymoon period with voters and, of course, opposition saying, "We told you so." Markets are bracing for clues on artificial intelligence, the trajectory of revenues and the outlook, closing slightly higher yesterday. That's markets as Nvidia prepares to report its latest results. Analysts see another blowout quarter. Galloping sales of Nvidia's artificial intelligence processors have lifted its market capitalization from $350 billion at the start of 2023 to $1 trillion, then $2 trillion, and then $3 trillion. It overtook Microsoft in June, another artificial intelligence-driven giant, and also the biggest buyer of its chips as the world's most valuable firm. AI is no doubt a key driver in today's industrial thinking, but what will emerging markets and countries like Nigeria, how are they going to fare in this new wave? We have Niyi Yusuf, Managing Partner Verraki and Chair Nigerian Economic Summit Group, to discuss opportunities and how to get started with AI in Nigeria. Social media giant CEO Meta boss Zuckerberg says the Biden administration pressured Facebook parent Meta to censor content related to COVID-19, adding that he regrets some of the decisions taken in relation to the US government's request. President Bola Tinubu will next week embark on a high-profile visit to the People's Republic of China aimed at fostering economic ties and securing investments for Nigeria. We also will look at some of the issues around the visit. The media advisor to the president, Ajuri Ngelale, said the program of the president includes site visits to prominent Chinese corporations, including Huawei Technology, the China Rail and Construction Corporation. China is positioned to empower countries frustrated and sidelined by the present order while still not completely alienating US allies. China initiatives are today backed by a comprehensive, well-resourced and disciplined operational strategy, making China an agent of welcome change while portraying the US as the defender of a status quo that few particularly like. It cannot be lost on China that Nigeria is Africa's largest market with huge infrastructure gaps and scope for hypergrowth in a tepid global economic space. Beijing sees a transformed world order built not just on multipolarity but on a different international consensus which ends US dollar dominance, touting also a pledge to leave no country and no one behind. But there are hazards to be wary of. A recent survey showed 63% of Africans polled in 34 countries believe China is a positive external influence, but only 22% see China having the best model for future development. 3 issues are worth mentioning for Tinubu to note. First, the weak record on human rights, noticeable in Beijing's treatment of its Uyghur minority population. Soft issues like human rights are becoming much more important. Social activism against subtle injustices could create future conflicts as China appears weaker on ethics. Though there is little evidence that corruption is rife, systemic controls are weaker and there are some question marks on contracting and program management processes. Second, China is undergoing a period of some economic weakness and may have to adjust to a lower pace of growth as seen in more developed economies. China's sustained real estate crisis, its aging population, and Chinese leader Xi Jinping's tightening grip on the economy with mixed signals for investors means while it is not a weak partner, it is more vulnerable. Exposures to China therefore needs to be measured. Also, exposure to dumping cannot be understated. Beijing's industrial policies have led to overinvestment in production facilities in sectors from raw materials to emerging technologies such as batteries and robots, often saddling Chinese cities and firms with huge debt burdens in the process, and of course unsustainable trade imbalances. Beijing needs new export markets as the West slams tariffs, and these are markets that will be able to buy heavily subsidized inputs with cheap financing, hurting unguarded economies unable to compete with higher operational costs and borrowing rates. In short, Nigeria needs investment partners urgently, cannot afford to play too hard to get. Still, it should see China as a future competitor from day one and must go into talks with a strong win-win buyers. Generative AI has the potential to contribute up to $4.4 trillion annually to the global economy, prompting Nigerian businesses to explore its benefits for innovation and, of course, efficiency. Mr. Niyi Yusuf, Chairman Nigerian Economic Summit Group and Verraki Managing Partner, is here to discuss a recent Verraki report which explains how to get started and showcases other insights on AI in the Nigerian environment.
Artificial intelligence has the capability to transform and radically change the way we live and the way we work. And indeed, it is affecting businesses globally. There are studies suggesting that artificial intelligence can add an extra $4.4 trillion into the global economy. Think about that. And in Africa, that's potentially about $7 to $8 billion every year into the African GDP, and in Nigeria, about $160 million as early as next year into the Nigeria GDP. So it's something businesses should be concerned about. How can we take advantage of the benefits that comes with artificial intelligence? And today, there are more than 64 startups in Nigeria that are using AI or that are providing services driven by AI. 64. And they are being used in different sectors, be it in education, be it in health. And so really the question at the top of most businesses, most leaders, given the study that Verraki has just published, is how should we then go about preparing our companies for Gen AI? And we think there are top 10 questions that leaders must consider. The first is, how do you really start this journey? And our recommendation is you start it in a very responsible manner. And so you must define policies that will provide safeguards for how AI will be used in your company. So policies around copyright, protection of human dignity, biases, data privacy, etc. So when you establish those policies for responsible AI, that would then lay the foundation for every other thing that a company plans to do based on artificial intelligence. And I think the second thing is, how do you then organize yourself as a business to be able to capture the benefit that comes from AI? And I think whether you're looking at a centralized model or a distributed model or an hybrid model, a federated model, really doesn't matter. I think a few things are essential, really. The first is there must be proper accountability who is responsible for AI in our business. So whether you call it a chief AI officer or a chief scientist, you really need to have that sense of accountability. You also need to have leadership being involved in the journey. And so your organization model must be such that it is clear who's responsible, who is accountable for your AI projects, who must be consulted, and who are those that must be kept informed. The third question really would then be, what kind of skills do you need? Obviously, you say you need technical skills. So whether it's software programming, data sciences, data analytics, you need those technical skills. And so those you will get from your technology guys, the tech geeks, like they say. But I think the second set of skills will be around the culture. The organization needs to have a culture that embraces technology, a culture that embraces experimentation, a culture that makes people understand that you can use technology to drive new initiatives. And thirdly, you also need to be able to provide some strategic resources. Obvious one being data, but beyond data is also the computational power. The electricity, the computing resources that will allow your team to gather as much data, be able to refine the data, use that data for the AI to learn, and for the AI to develop what they call LLM, large language model, based on a huge database. So that is important. The fourth thing will be, what kind of best practices should you take in implementing and adopting AI? First is identify the use cases. You can't boil an ocean. So your AI must focus on a few important use cases, use scenarios. And so identify the use cases that are relevant to you, do a pilot, and with the results of the pilot, you can further fine tune before you now blow it open and go forth. But beyond that, you also need to establish internal controls, risk management, safeguards to ensure that the AI is done in a very responsible way, tied back to the first one, which are your responsible AI policies. You also must ensure compliance, legal compliance with all regulations. In Nigeria, you have cybercrime regulations, you have the NDPA, that's the data protection regulation. So you must provide for all of this. Next thing will then be, when you embark on that journey, how do you measure your progress? How do you measure the benefits so that you're not just pumping money and resources into this AI journey? You need to have clearly stated metrics, KPIs, both quantifiable and qualitative. So your quantifiable ones will be, cost, revenue, but you also have to measure things like customer satisfaction, employee satisfaction, the impact on the environment, etc. So it's not just about money, and revenue is important, by the way, but you've also got to look at other non-financial measures like customer satisfaction, like the risk you're taking or the biases you have. Now, how do you balance the benefits with risk taking? And I think it's down to starting small, having that pilot, and based on the pilot, you can understand the risk area, you can understand what you need to adjust and how you need to balance. I think a lot of training, a lot of communication, and also reverse mentoring. So let the young ones, link your directors and board members with some young technology guys, so that there can be some form of reverse mentoring. The digital natives are more automatic, and they can then train the and train the board members. But it's important that the board members and management and leadership they have the right skills, they understand AI, such that they can ask the relevant questions, but also so that they can support with the relevant investment.
Asian equities slipped as weak corporate earnings in China raised fresh concerns over its flagging economy. Traders are also focused on Nvidia's results for direction on the growth momentum of artificial intelligence-related stocks. Oil prices remained volatile as investors guarded around potential supply losses from Libya and the Middle East, and worries also countered by the uncertain global fuel demand. Brent under $80 in early morning trade. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.